Happy New Year. I'm here with another feel-good video, as one client described it to me over the phone. That's not the intent of what these messages are, but if that's the result, we'll take it. That's not too bad. In our last video, we talked about giving the market a wide berth because things were so mixed up, there's no way to really analyze and make a determination of direction. Well, that wide berth gave in about 10 days ago, and we have become quite defensive. In fact, we're defensive prior to the fall off yesterday in the market around the world. So as a consequence, we sit here studying the technical aspect of the market, which is just studying the market itself, the dynamics, the supply demand for stocks, the movement of monies. And I have to be candid. In looking at all the technical indicators, there are none that are positive. Most of them are negative. At best, we have a few neutral. But the picture is pretty gloomy on the technical side. On the fundamental side, looking at life in general, we had a report of the Purchasing Managers Index, which was down at 48 and change. Now, what does that mean? Anything under 50 is a shrinking economy, representative of a decline in purchasing managers' numbers. So that's the first signal, and hopefully it's not a precursor to many more signals on the negative side. When we look at the market in general, though, it's interesting that from the market high, with the Russell 3000, which is the broadest index, including all of the stocks in the United States, 81% of the Russell 3000 is down over 10% already. 63%, almost 2/3 of all stocks are down over 17%, and 20% of the stocks, 1/5, are down over 55%. That just tells us that the market has been held up, that the index itself is riding on the back of a very few strong horses. But in general, the state of the market internally really is in decline. You've got the Iranian-Saudi Arabia face-off, which seems to bring us closer to war. You've got terrorism, and the big boogeyman in the closet, of course, is the politics. Without being political, we have to look at the policies that would come out of election results. On the Democrat Party side, they're promising to double the tax on capital gains, double the tax on corporate dividends, and raise the minimum tax for earners over $200,000. Well, if those things come to pass, anybody with a gain in a portfolio this year and collecting corporate dividends this year is going to be looking at a doubling of the tax to get out, and a doubling of the tax on the earnings next year. So chances are, with that kind of a happening, people will begin selling some things to pay a lower tax this year. On the Republican side, it's a catfight. It's a Donnybrook. There's no way to determine what the policies are going to be, let alone who the leaders are going to be, let alone whether the Republican Party can survive this thing. The process of selecting a candidate is getting pretty messy. So with all of these uncertainties, and remember, markets hate uncertainty. With all of these uncertainties, we can expect to be defensive. But we're in good shape. We've got lots of cash, and the stocks that we do hold are either defense contractors or very stable kinds of earners that are not connected to market cyclicality or economic cycles. So we're being optimistic. We're looking for opportunities, and it may come in a different way. But that's our position now, and hopefully it makes you happy again. Thank you.